The end of the year is near, it's Christmas time, and the market is still pushing. What can we learn from the market? What is the probability? What can we expect? And maybe most important, what can we do as a trader to have the best out of this situation? Let's start with the Nasdaq. It was the engine of the stock exchange this year. We had the most push coming from the tech industry. So let's check this market first. But of course, we also need to check the S&P 500, the broad market with 500 stocks inside. And of course, we also need to have a look at the Dow Jones future to have a clue what we can expect in this case. And as an additional idea, maybe we should have a close look at Tesla and see what we can learn from that as well. So starting with the Nasdaq, we can see that we are still in a strong move to the upside, and we can see that this movement is really strong, coming back, really strong, coming back. This is a strong setback. I don't want to mention this too deep currently. I think it's not really useful, but we can see that the market is pushing forward after that as well. So we can see this structure, which is looking quite like a 1, 2, 3, 4, 5 wave move. And this is a very typical into the direction of the trend, which is a impulse move. You can see 1, 2, 3, 4, 5, or in the big picture 1, 2, 3, 4, 5. This is a very typical thing. But after that, that's over, and you can see what this will bring. It is after 1, 2, 3, 4, 5. We can expect some setbacks. It is a corrective pattern. What we may expect here, and we can have the same situation here in the big picture as well. So this is leading us to some idea that this move is maybe not at the very point now, but is near the end, so that we can expect that the market from now on is only moving a little bit to the upside and then turning around. And the question is, will this be a big turn or only a small one? So normally if we see some 1, 2, 3, 4, 5 wave move, an impulsive move to the upside, we can at least draw something like a Fibonacci retracement. Let's start here from the lowest point of the last 5 wave move here. And if we see something like this, we can expect that the market is giving us a setback. I don't know where the highest point is, so we can just estimate where it is. It might be a little bit higher than now. It might be at the very point here, but I think we have a good chance because the latest move before the weekend was a strong move to the upside. So I see we have a good chance that the market will continue at least one last time before turning around. This is not super important now because this is not changing these levels very much, but if the highest point is roughly around this level, this is just an educated guess, let's say in the high 12,800 or maybe up to 900, then we can expect that the market will come back at least just to correct this movement here in an ABC pattern, which could lead us down to 12,200 roughly, which is a super typical setback because this is the same level we have here with the intermediate lows from 10th of December and 11th of December. So if you check this with your contracts you're trading, this is a Nasdaq future NQ. This is a mini future from the CME, the March contract in this case, of course. It's the front month. So we can expect that the market will guide us down to this level here, which would be a very typical level for a setback dealing with this situation currently. So after that, is it sure that the market will continue to the upside? To be honest, I'm not very sure about that because this setback here, if this occurs, which is a very typical thing, would give us an overlapping situation with the previous setback. And we can see we have too many, to be honest, to make me happy, we have many overlappings here. I'm not against overlappings, but too many overlappings are giving us an indication for an end of a movement or a corrective pattern. In this case, it is into the direction of the trend because this is upwards and the whole trend was upward. So this is a very typical thing, which is very typical in a ending situation here, and maybe it's an ending diagonal, or I also can imagine that this is part of a corrective pattern, which is something like an ABC here, and we have something like an ABC here, and coming down strongly here to give us a real corrective pattern we still need from the March lows. Measuring this up to the current levels, maybe a little bit higher, but we can see even in this case the 38.2, which is something like a minimum. It's not necessarily the minimum of a setback, but this leads us to 10,500 roughly. Why the 38.2? Of course, because it's a typical level, but it's also about how far these levels are going back. If you have some moves like this, even if you are super bullish and you have a move like this, you can ask yourself how much is the second wave is going down. And if we measure the second wave here, we can compare the second compared to the first wave. So what you can see here, the first wave, the length of the first wave compared to the second wave, you can see, okay, the second wave, 38.2, which I mentioned before with the Fibonacci level, it's roughly here. So this is in the high probability area here. It is not about the peaks. Please don't get this information wrong. If you're not sure about this curve here or about these areas here, you can see my other video. I will link this in the description so you can easily find this. It's or you can just click on the upper right corner. There's also some I mentioned this video as well about the probabilities of the markets in relation to the Fibonacci's and the Elliott waves. So if you see this level here, the 38.2, it's a very typical one. If the setback is smaller than that, it's still possible. Anything about 5% draw setback, it's not a drawdown on your account, but a setback of the market. All of these, everything going below 5% is okay. It's in the statistical range of probable outcome for a second wave. But it's not very typical. You can see the probability is quite low. The probability of the first area here is set at 20%. So if the market is only dropping by 22% roughly, the probability that there's the low is only 20%. So it is the best educated guess that the market is roughly turning down to, let's say, 30%, 35%, 40%, somewhere around there, or maybe even a little bit lower than that. If it's too low, then it's not very probable that this is still an impulsive move. So if the market is going way lower than that, probability is not very high that the market will continue in a very steep moment here. At least not as an impulsive third wave in this case. But let's stick with what we have here. So if the market is going into this direction here and going to that level, I think we have a perfect situation to enter the next bull cycle. We can talk about this in a next week maybe, or before New Year, to have a perspective for the next year. But in this moment, we should still keep in mind this picture is still valid. I think many people don't have this on their watch list anymore because they say, no, the market is moving up strongly, so no chance that the market will come down. No, it's still a very typical one. You remember, this is a very typical corrective pattern. ABC down, ABC up, and a strong move to the downside. If you don't remember that, this is a very typical flat pattern. ABC down, ABC to the upside. You can see that this level is above the starting point. And after that, a very short or a very strong down move here. You can see the C wave is quite strong here. It's an impulsive move in the flat. And by probability, these flats are very common. It's not very rare to have these. And you can even add these double sideways. They are quite similar. Only the internal structure is a little bit different, but the outcome of the movement is roughly the same. So to be honest, we should have this on the list. It's high probable that this will occur in the near future. But it's really, really important. As a trader, we are not only dealing with the situation what is most probable. So please don't enter a short position right now. Currently, we don't see any evidence that the market will turn down now. It is just a good chance having a look at this pattern, having a look at this pattern here with the latest half here, which is probably coming to an end soon. But this is not giving us an indication to turn down all long positions currently and switch to the short side. It is only like a warning signal. Be careful, we might come to an end of this movement. And this may lead for lower lows here and for lower movements roughly around to the 10,000 level here as well. Okay, so don't we have any chance that the market will continue to the upside? Is this crystal clear that this is the outcome we need to expect? And how shall we react as a trader? First of all, this is a very typical outcome and we should have this on our list. So if you are trading long currently, which I really hope because the market had a great run so far, you should think about, do you want to allow the market to pull back to these levels here? And you still keep your positions? If you think so, yeah, because I'm buying my stocks for the grandchild, everything is okay, you can keep it. Chances are quite well that the market will continue up after that. But if you are fearing a movement like this, 2,500 points, for example, can be even more than this, then you should care for that. You can, of course, you can close your positions maybe with a trading stop. You can have something like a super trend, for example, and just say, okay, as long as the market is staying above these green dots, everything is okay. So you might have a stop if you have the super trend in my standard settings here. On a daily base, you will have it roughly at 12,156. In this case, this is not a perfect number. This is not the best choice you can have, but it's a very nice choice to have at this. So if you see this bull market here, you can see in most cases, you would have a lot of fun with this stop idea. Sometimes you might have been stopped out. Not necessarily, but sometimes in this case here. And so if you want to stick here without these setbacks and having the need to re-enter the market, you may do the same situation here with a bigger picture, for example, in a weekly chart. Or you can take the parabolic SAR, which is also giving us the same idea of trailing the stop, and you can think about that as well. And of course, you don't need to take exactly these. You can switch the numbers. The only important thing is you should have a look at this movement and say, okay, as soon as the market is plunging through the last lows here, you can of course also trail, just having in mind, okay, this was the last low. As long as we have higher lows, higher lows, higher lows, everything is okay. But when the market is breaking this idea, then you can close the position just to prevent bigger losses on your account. On the other side, if you're a little bit more an active trader, you can also see on a lower time frame, not necessarily on a daily chart, you can see, for example, the 4-hourly charts or the 15-minute chart and see what the market is giving us there. And the good thing is, the good news, everything you can see in the big picture on a long-term perspective is roughly the same idea what you can see here in a lower time frame. Even on a minute base or 5-minute base, you can see, okay, in this case, you will always see, not always, but very often you will see strong moves into one direction and an ABC move into the counter trend, a strong move into one direction and a corrective pattern, a strong move into one direction, and so on. It's not necessarily all the same, but very often if you see something like an ABC, this is a typical corrective pattern, and after that you can expect that the market will do the different direction. This is a very typical one. If you see the standard chart here, the impulsive move, you can see after this one there's an ABC and then continuing to the upside. And of course this is not only in this situation here, you can have this three-wave pattern and most of the corrective patterns here. It's not only looking exactly like this, which is a zigzag, a typical zigzag move. You can see this here. To ease it up, just don't see the internal structure, just an ABC. But even if you see a double zigzag, for example, it is an ABC. Okay, it's called WXY in Elliott wave speech, but most people just simplify it, and also I do it like this, ABC, because it's just giving us an impression. Even this a little bit more complex guy here is an ABC structure. So you can see 3-wave pattern very often, and all of them are corrective patterns. So if you see a pattern like this, you have a good idea what the market is doing or giving us next. I think a really interesting thing in this case is we should keep in mind, take care, because let's show it here on the 4-hourly chart. If it's an ABC pattern, you don't know exactly whether this will follow or that will follow. So that's a really important thing. That's the reason why I'm always using something like a trigger. I'm not entering the market at that level and saying at that level here, let's go back a little bit, at that level, and say, wow, this is a typical ABC, now the market needs to go there. No, it does not. It could be something like this. But if the market is breaking this level, then this is very untypical. Or at least the probability is way lower than that the market will continue to the upside. So that's the reason why I'm always using this strategy. If I see a strong move, especially if this is the first one, so the market is coming down here, this is the lowest point, this is the first move to the upside, then we get an ABC pattern, then I have something like a trigger to expect the same like we had before again, and that the market is continuing, maybe only here to this level, one-on-one, or maybe even further. So we can expect that the market will run and will continue to the upside way higher than before. So that's the reason. This is working into both directions, of course. In this case, it's a possible drop when the market is going sharply against the trend and then is coming really weak to the upside, ABC, or really shaky with overlapping price patterns or overlapping price levels here, then we can expect that the market at least is giving us something like this. And this is really typical because in 1, 2, 3, 4, 5, I'm just confused by myself, 5-wave up, ABC to the downside, which could give us this case here. But to be honest, in the big picture, I still see a good chance that the market more or less is coming to an end. I cannot promise that, but we have to deal with this situation. So I would not enter a long position unless the market is overshooting this level. And I'm just fearing that the market is going down. Yeah, well, but when the market is going down, is there anything we can do as a trader as well? Yes, there is. You can see this is roughly the same situation. Strong to the downside, shaky to the upside. So you can see when the market is triggering this level, we can at least trade this down move the same size here. And we can trade our stop and continue staying in the market, or we can take profits here. I'm typically taking my profits because I love to take profits, which is very often a good idea. But sometimes, of course, I'm wasting some extra benefits from the market move, but very often it's perfectly fitting. Why is it? Yeah, because if we have a strong move at the very beginning, we can have a close look at that as well. A strong move is something we have here in an impulsive move. We have a strong move here, and then we have a setback, and we can expect that the market will continue. And we only have one other pattern where this occurs. It's a zigzag. Also a strong move, and after a setback, an ABC, we can expect that the market will continue strongly. These are the most common patterns in this case. There are some cases with a leading, for example, and this can be part of a flat corrective pattern, but I don't want to talk about this now. This is an extra video, I guess. But and you can wish for it. If you say, I want to learn more about this or that, just drop a line in the comments and I will take care, and I want to bring up these in one of my next videos. So please do it if you wish for something. And but if you have a strong move like this or a strong move like this, we can expect that the market will continue. It can continue very far, but at least we can continue something like this. And if we can see how far is the third wave moving compared to the first wave, there's also some kind of a probability. If we just check the first wave compared, or the let's say like the third wave compared to the first wave, we can see 100% is very typical. It can be a little bit less, it can be even more, but if you target the 100% level, you have a really good chance that at least this level will be reached in both cases. In this cases as a zigzag, but what about in this cases as an impulsive move? In this case, third compared to the first, it's a nearly 100% clear that it's going there. You have roughly 80%. It's only 20% that the level is below 100. But you have 80% that it's above 100%. So it's a good deal to at least think of reaching that level and target the 100% projection here in this case, which is roughly here, depending on the length of the first wave, of course. So I hope this is giving you a good idea what to think about the market should do in the next few hours here, trading hours. Let's have a closer look at the 50-minute chart. You can see after the last, let's stick in the 50-minute chart. After the last drop we had here, we had a really strong move here, a strong recovery. So this is still and again looking really strong. So in a lower time frame, you can expect that if the market is giving us something like this, that the market will continue. And also in this case, you can think if this is the first part, you can expect something same size. So you can target somewhere around this level here in nearly any case with good chances for higher prices as well. But how can this be? Because we were talking about a turning market here on a bigger scale. Yeah, but it is possible that the market will continue a little bit higher before turning. So don't expect a market to turn at once. Wait for the first indications that the market will do, and currently the market is not doing. We had a little bit of an indication here, but you can see this is looking like an ABC. As soon as the market is overshooting this level here, the down move is not the best choice here. It's not the best option to sell short the market at the current movement, as long as the market is not continuing down really strong from now on. But it's easy for us as a trader to decide, is it this move or is it this move? That's the most important knowledge we as a trader need. Can we decide, or can we see the difference between this picture and this picture? And I think this is a really easy thing to be aware of. Okay, so let's switch to the other, the S&P 500 and the Dow Jones, and both are quite similar in the most recent outcome. We had a strong move here, and we had a really shaky one here, and you can see this is looking really corrective. We have many setbacks here. We had a small one here. Here is something. So we have a lot of overlapping here, and roughly the same with the Dow Jones. This one and this one and this one. So there's a high probability that the market is now not continuing very far anymore, because even this at the very end here is not giving us the best strength of a typical impulsive move to the upside. So I see a big chance that the market needs a breather, which can easily lead us down to the, let's say, 29,000, for example. Let's say 28,000, even 28,000 is still a bullish picture if the market is going down there, for example, something like this. I would not be confused about the market direction. It's only a setback pattern, a corrective pattern in the bull market. So shall we short the market? No, of course not. Currently, there's no indication of a weak market. We still are strong on the bullish side, but please don't get overwhelmed by this strong move to the upside on a lower time frame. This not necessarily means Dow Jones at 40,000. This only means that it's not the time now to sell short the market, as long as the market is giving us something like this, followed by a corrective pattern. We can still buy on the lower time frame and say, okay, we are not sure how far this will bring us, but we have a good chance that this will still lead a little bit higher, and we should not sell short the market. This will immediately turn my opinion when the market is giving us a strong move to the downside, but that's not all alone. We had this here also. But the second is we need something like a ABC or corrective pattern here. ABC, yes, but never triggered. So no chance to sell short the market anyway. So we can see the market is giving us a lot of indications what we can do and what we should not do. As long as one move is strong and one move is weak, we can at least for a while stick with the direction. Okay, so I hope this is giving you a good impression what the market is doing currently, and I hope you have the best chance to deal with this situation. We should think that the S&P 500 is a really interesting situation now because the Tesla stock is now entering this market. So this is maybe driving the broad market index as well, the S&P 500. So I will do another video on this, maybe not at this very moment. So it's really important, if you don't want to miss this, subscribe this channel, please hit the bell, and of course I would really appreciate some thumbs ups. This is a quite new channel. I'm doing this in German language only normally, but because of some requests I started to do this in English as well. Merry Christmas to you and your family. Please stay healthy, take care. Thanks for all the confidence and watching this video so far, and yeah, please stick with me and let's have a wonderful time together.